across the Nifty 50. You have a 0.5% recovery from the day's lowest point and looking rather solid right now, holding on comfortably above the 23,900 mark. Let's see if today is a day where we manage to cross that 24,000 mark. We're optimistic of that happening. But on that note, let me also welcome Jay Thakkar, Head of Derivatives and Quant Research, Vice President at ICICI Securities, who's joining us on the show now. And morning, Jay. Thanks so much for joining us on the show. I want to address the report that you've come out with at ICICI Securities. Do we have Jay? Yes, Jay, hi. Thanks for connecting with us, and also give us a sense of this interesting report that you have published, and also tell us if you expect equity participation to remain upbeat going ahead as it has this year. We've seen some very solid SIP moves also coming in, some very strong data to support the participation, the retail participation rather, that we've seen in the equity markets. Do you expect this to continue or even improve in the year 2025?
Hi, very good morning to you, and thanks for having me on your show. Well, as far as the kind of report which we have released, this year, this yearly quant outlook for 2025, and we have analyzed various, parameters wherein we have checked in where the FII flows have been and how markets react to the FII flows and DII flows as well as the prop or the retail flow. So that's a very important part as far as the market liquidity is concerned. And interestingly, what we have found out is that if you check from calendar year 2017 until 24, so we have checked until the data until November 24. Interestingly, what we have found is that whenever there has been a negative flow by the FI as far as the secondary market is concerned, right? Generally, markets give the returns of almost 2, 3, 4%. It doesn't provide the returns in double digits. There was an exceptional year in 2021, calendar year 2021, wherein FII sold off around 54,000 crores in secondary market, and despite that, market delivered 22% returns. Else, if you check, the returns are always good in Indian markets, equity markets in double digits whenever the FII flows have been positive. So that is one interesting data. And this time around, we saw that FII sold more than 1 lakh crore, almost to the tune of 1.5 lakh crore, and Nifty delivered returns in single digits almost by 9%. So that's one important point. But then what's interesting is we found out that if we check since COVID, since 2020, is that the participation of the retail or the domestic institution have really increased. So now if you check the DIIs holding in the Indian equities, there's almost 38%. And FIIs holding in Indian equities has dropped down to approximately 16%. So more than double is what DIIs are holding right now in Indian equities. And the major reason for that is the SIP flow, as you rightly mentioned. I mean, now we've seen that almost 5 crore unique investors are coming through the mutual fund investments in India. And interestingly, we have clocked the figure of 25,000 crores SIP per month. So that amounts to almost 3 lakh crores per annum. So the DII investment in calendar year 24 has been 4 lakh crores. As against the exit of FII from the secondary market of 1.5 lakh crores. Hence, the markets have not corrected much. If we go a decade back, and if this kind of an FI outflow would have been there, then market would have corrected even more. And as far as broader markets are concerned, this time around, if you see, whenever Nifty corrects 10%, 12%, the broader markets, generally the mid and small cap indices correct by 25%, 20-25%. This time it outperformed the frontline indices, did not fall much, and that was due to the retail participation, this kind of SIP flows that's coming out. We have also, interestingly found out that retail investor direct equity investment has been 1.25 lakh crores in calendar year 24. So there you see that the FI figure has almost been, meted by, DI flow as well as retail flow directly, indirectly. And I think that this flow is likely to continue going forward in 2025 as well. In fact, we have interestingly studied the data of US. So if you go and check the US data, because generally the Indian financial markets are replicating the US, going forward in the long term. So 1980 to 2000 period for the US markets, wherein the household, holdings as far as US equities were concerned were almost by 39 to 40%. It went from 10% to 40%. Indian, household holdings as far as Indian equity market is concerned, it has rose now to 29%. And we have the strong demat accounts as well. I mean, 17 crore unique demat accounts now in India. So that's now gone to 29%, and we expect this to go to 40 or maybe beyond that, 40-45% as well. So there's much more room, much more liquidity flow likely to happen in India. And where is this flow going actually? So what we've seen is in calendar year 21, if you see the amount that comes from retail or mutual fund, directly, indirectly into the Indian equities. Uh, the mid and small cap indices, I mean, the large cap or the difference between large and mid and small cap, there in the broader markets, the participation of the flow was 10% higher than the large caps. From 10% to 20 in 2024, it has gone by 100%. So the amount which has been invested in mid and small cap has been 100% more than the large caps. Hence, you have seen the flows coming more in flexi cap, followed by the sectoral or the thematic funds. And thereafter, if you go and check mid and small cap, last is the large cap. So the flow out there in the broader markets is huge. The retail participation has increased. And I think the kind of journey which we have seen of the US equity, the household participation, if that continues here, I think going forward too, we would see much more flow coming in India,
Okay.
and that would help the markets to, in fact, move to high levels in coming years as well.
Sure. No, that's an interesting analysis as to how US really panned out and how India is likely to perhaps follow suit. But that all boils down to what we're expecting from next year with respect to Nifty, right? A lot of participants believe on the fundamental side that there is no major upside. We're not likely to scale maybe the fresh highs in a hurry. What's your own prognosis for 2025? What's the level to watch out for?
Well, for calendar year 2025, we have a target of 27,500 on Nifty. And, quantitatively, if we see, the dynamics of markets have actually changed from 2020 lows, right? Wherein I just mentioned that the participation has increased by the retail traders. The flows are going into the mid and small cap. The broader markets have rallied quite a lot. So keeping all of this in mind, what we have also interestingly found out is that the markets are generally following the mean reversion technique quantitatively, and on the lower side, it deviates from the mean by around 1 to 1.5 sigma. So the lower end for the markets or for the Nifty, the support is likely at around 21,800 to 22,000 levels, which is around 2,000 points from here on. I mean, that's the crucial support. And markets deviate by 3 sigma on the upside. And that trend has been continuing since COVID. And with this kind of a flow, we believe that the participation or the support at the lower levels will be there. Hence, the 3 sigma target on the upside for the Nifty comes to around 27,500 for calendar year 25.
So 27,500 is your upside target on the Nifty. But before we let you go, Jay, a quick call as far as the sectoral trends are concerned. And if you had to name, let's say, one top recommendation for 2025, both in terms of sectors as well as stock, what would be your top pick?
Sure. See, as far as the sectoral performance is concerned, we all know that in last 3 or 4 months, oil and gas sector, auto sector, realty, energy sector, all of these have really underperformed the Nifty, and that is where we have seen FI, in fact, selling out, from those sectors. In fact, we have seen DI also liquidating from those sectors, and the money has actually moved. So when you check the money flow, it has moved to the sectors like consumer durables, capital goods, pharma, IT, these kind of sectors. So I believe that going forward, pharma is likely to perform well as well. And stocks like Dr. Reddy's, DV's Labs, Laura's Labs are the recommendations from our side, which we believe are likely to perform well going ahead. As far as the short covering candidates are concerned for the initial couple of months for calendar year 25, because we have seen, there was huge short data as far as Asian Paints, so probably the names like FMCG names like Nestle, which is an MNC, stocks like Reliance, Axis Bank from the banking pack, and Bajaj Auto and Tata Motors from the auto. So these are the sectors like FMCG and others I mentioned. I have really underperformed. They are likely to underperform going forward as well. For the initial quarter of 25, they are likely to see short covering, but the performance is likely to continue. We believe in consumer durables, capital goods, some part of metal. Hence, we have a buy recommendation on Ambuja Cements. We believe that it's likely to perform quite well from here on. Also, stocks like Vedanta are likely to perform. Zydus Life has seen a good amount of long liquidation, but that has come to a good support. So Zydus Life would be a good buy. So pharma, consumer durables, capital goods, these are the sectors to watch out for in 2025.
Thank you, Jay, for joining in and sharing with us.